Indications from China that it is open to talks with the United States fire up IT stocks, and energy are the biggest gainers, while consumer durables is in a soft spot.
Eternal says competitive intensity is fast growing, quick commerce is rising, but Blinkit won't take the foot off the pedal, spelling likely expanding losses. Even food deliveries by Zomato slow down.
Passenger vehicle sales improve in April. Tractor sales also beat estimates, but two-wheeler sales show a mixed trend. The SUV segment sees a strong growth, helping Mahindra & Mahindra take number 2 position in the PV retail sales.
SEBI Chairman Tuhin Kanta Pandey says there is an intention to find a solution on the NSE IPO with a roadmap that SEBI and NSE can agree on. He also says a second set of rules for F&O should be out soon.
Cognizant says 20% of its code is presently written by machines, and this could rise to 50%. They see developers writing codes with machines and the focus shifting from services to embedding technology in products. Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Ekta. As we speak, the markets have come off the high point of the day, and that's because of the big news piece that came in the last 1 hour or so. The Supreme Court has gone down hard on JSW Steel, and they're saying that that acquired asset, Bhushan Power and Steel, will have to go into liquidation. It's not just a negative for JSW Steel, it'll be a negative for the system itself, and also bankers will be wondering about, how things progress from here on. I think that's the reason some of these PSU banking names have taken a hard hit. JSW Steel, remember, they had bought this asset for around 20,000 crores. Well, let's focus on Mindspace REITs. That's the first management on the show. It reported a good set of Q4 numbers. The company recorded its highest ever gross leasing for the quarter at around 2.8 million square feet. To discuss this and more, we have Mr. Ramesh Nair, the CEO at Mindspace. Hi, sir. Good day, and thanks a lot for joining in. Well, give us a few details then. The DPU, I think, in the last quarter, it had gone up a little bit. For the year, what kind of growth are you looking at? And also, if you could give us a sense about how do you see occupancy span out for FY26?
Nigel, we have had an outstanding financial year and outstanding last quarter for the financial year. Our gross leasing for the full year was 7.6 million square feet, which is the highest since listing. Our net leasing was 4.4 million square feet, which is again the highest since listing. Our occupancy rates have touched 93%, which is again the highest since listing. NOI grew for the year by 9% and distribution for the year grew by 15%. Coming to the last quarter again, gross leasing was 2.8 million square feet and net leasing was close to 2 million square feet, again both highest since listing. Our NOI went up 13.2% in the last quarter and distribution went up 39%. We hope the occupancy rates, which are 93%, over the next over this financial year would go towards a 95% mark. Okay, got that. All right. You've also said that that leasing demand. Basically, I want to understand what kind of leasing demand are you seeing from GCCs as of now? Is there a slowdown, or is it as strong as say a couple of quarters ago? See, it's an evolving situation. We are monitoring it closely. Not seen any immediate impact on the leasing market. You may remember that the calendar year 2024, we saw a total net absorption of 50 million square feet, which is an 18% growth. I was checking the numbers of the property consultants for the first quarter this year, the first calendar quarter this year. Net absorption has again gone up 59%, close to 13 million square feet, and gross absorption again has gone up 28% to 20 million square feet, and vacancy rates the lowest in the last 3.5 years. So market doing well. The GCCs again in the first quarter have taken 45 to 50% of the overall demand, and the market is being dominated by big size deals, which we typically call as 100,000 square feet plus deals.
Okay. All right. Mr. Nair, you mentioned that, vacancy rates are the lowest that you've seen in 3.5 years. So it seems as though business is looking good for you. But any headwinds that you can point out to the demand that you could probably share with us in FY26?
Like I said earlier, not seeing anything as of now. For us, the good news, Ekta, is that we've done a lot of pre-leasing. The 1 million square feet building, which we just got completed in Pune, that is again fully pre-leased to a global energy GCC. The 1.5 million square feet building coming up in Hyderabad, which is going to be ready towards middle of next year. That's again been pre-leased to a global banking GCC. So, and a data center, 350,000 square feet, is again been pre-leased. So, we are kind of neutralized ourselves from where the market is. In case something goes wrong in the market, we have kind of de-risked ourselves from that.
Okay, fair enough. You do have 3 data centers which are remaining. Can you give us a sense in terms of when you expect the delivery to take place and what is the pipeline looking like as well in terms of incremental data centers?
So our data center portfolio today stands at 1.7 million square feet, total of around 285 megawatt. This kind of helps our portfolio from a long-term leasing. It's all long-term leases, 20-year plus leases, longer lock-ins. The first 2 data centers have already been delivered out of the 5 data centers. The next 3 would be delivered in a phased manner over the next 2 to 3 years.
Okay. All right. Just a quick, question with regards to demand as well. You just did speak about the GCCs, but give us a sense in terms of the SEZ segment, if you did touch upon that already or not. What is the occupancy that you're expecting within that space?
So we've actually been big beneficiaries of the government's demarcation rule change, which happened early last year. If you remember, early last year, the government had allowed part-wise, flow-wise demarcation of SEZ space. I was checking the numbers. Back then, our occupancy rates in Navi Mumbai was around 76%. That's now gone up to 86%. We have already demarcated around 2.1 million square feet of our SEZ space, vacant SEZ space, and leased around 1.2 million square feet of that. So that rule change has definitely helped us.
Okay, all right, fair enough. We're going to wrap it up on that note, Mr. Nair. Thanks very much for joining in and speaking with us. So that's Mindspace REIT talking about how vacancy rates are the lowest that they've seen in their GCC segment in 3.5 years. As of now, they're not seeing any sort of headwinds come in there. And the first and the second data centers have already been delivered. We take a short break, but before we take a break, here is some good news. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past the Times of India to be the #1 news brand in the country. And that's not all. At the social plus on platform leadership network level, Network 18 is the runaway leader as per the Social Plus MMX Comscore report for March 2025, with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, at 202 million. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall, with 183 million unique views as per the Comscore report for March 2025. As per Comscore social media metrics report, Network 18 is 2 times bigger than the nearest competitor, with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of Social Plus MMX cumulative reach, News 18 Indian languages is the leader in the category, with 182 million unique views as per the Comscore report for March 2025. Welcome back. You're still tuned into a halftime report on CNBC TV18. Well, let's talk about one particular company. Mass Financial is the next management on the show. It witnessed what was strong disbursement on a year-on-year basis, but the net interest margin came under pressure. To discuss this and more, we have with us Kamlesh Gandhi, who's the chairman and the MD of the company, joining in to discuss this quarter gone by. Mr. Gandhi, hi. Thanks very much for joining in. If you could just start by talking about this disbursement growth, what led to this strength this quarter, and what are you guiding for?
Good afternoon. So if you see our performance for the quarter in terms of disbursement remains steady. And we had always prioritized risk management and profitability over just the disbursement and the AUM growth. And just to add to that, we are satisfied with the efforts that we did as a team to maintain the quality of the assets during this very trying time. So going ahead, we would like to say that we will be in a position to grow anywhere between 20 to 25%. That has been our stated objective since long. And we will endeavor towards that stated objective.
All right. Hi, Mr. Gandhi. Good day and good to see you in. This is Nigel on this side. It's been a while since we spoke. So you're saying around 20% growth. That's in dispersals, right? What about AUM growth? Where do you see this number move? I think the last recorded number we have is around 12,100 crores is your AUM. How do you see this number trend up in this year and say with a 3-year time horizon?
See, when we talk about the growth, we usually talk in growth of AUM because the disbursements differs upon the product and the tenure and many other factors. But we try to maintain the growth on AUM because that really makes a difference in terms of our earning. So the AUM growth will be around anywhere between 20 to 25%, depending upon the market situation that we face from time to time. And yeah.
Yes, go ahead, sir.
And
you wanted to make another point. Please go ahead.
And as I shared earlier, the priority will be that how we maintain the asset quality given the current situation.
Okay. If you could just narrow in a little bit on the micro enterprise segment, what are you facing in terms of this quarter? What were the key trends that took place? And are you seeing any kind of improvement there? And what are you guiding for?
So as far as micro enterprise loans are concerned, just to share with you one of the oldest finances in this segment, we have grown in a very calibrated manner over all these years, have again the niche expertise to manage this segment. So during this quarter also, there were some accelerated write-offs because of the overall situation, but overall we could maintain the quality of the assets. And if you see that segment has grown at a slower pace as compared to other segments. So the growth in micro finance has been on a year-on-year basis at around 9%. And that was a deliberate move on the part of the company to be cautious in that segment.
Got it. Okay, all right. Let's get a couple of numbers going then. What kind of NIM should we be working with from here on?
So we have always maintained that we'll have range-bound NIMs anywhere between 6.75 to 7.25%. Depending upon the interest rates and what yields we can charge at the market. If I talk about the current year we could maintain the yields at around 7.1%, the NIMs at around 7.1%, and that results into an ROF close to around 2.8%.
Okay. If you could just narrow down, Mr. Gandhi, on your two-wheeler and your CV segment, your commercial vehicle segment, both of those segments were quite sluggish sequentially as well if you look at the assets under management. Give us a sense in terms of the trends there, especially in the two-wheeler, which saw a decline of almost 3% Q on Q.
So that is a general market trend. Q3 is characterized by the festive seasons. So during festival season, the Q3 numbers are higher. So usually the Q4 numbers are lesser as compared to Q3, and that is in consonance with that trend. And even in our commercial vehicle segment, Q3 is usually strong as compared to Q4.
Okay, all right. But are you observing pain in micro enterprises, and how long do you think this pain will last?
I think the micro enterprise loans in particular will see some headwinds still on the asset quality for a quarter or two, depending upon the working of the company. But if we share our working, we have been very cautious and we have been in a position to maintain the overall net stage 3 asset, which is at around 1.62%. And even in micro enterprise loans, we could maintain it within the stated objective.
So I'm not sure if I missed this, but if you could give us your specific gross NPA ratio guidance going into FY26?
So we have always maintained a range bound NPA guidance. That means we will be anywhere between 2 to 2.5% on GNPAs and around 1.5 to 2% on NNPAs.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us some clarity. So just to revise those numbers, the AUM growth will be in the vicinity of around 20%. Your NIMs will hold at around 6.75 to around 7.25%. Thanks, Mr. Gandhi, for joining in and filling us in with all of those details. Well, time to slip into a short break. But as we do that, here's some good news coming in for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC-TV18 app now from the Google Store or the Google Play Store, or just scan the QR code that's up for you on the screen.
Welcome back. Well, definitely pressure in the mid caps at this point. So down around 0.7%. We have the advanced decline ratio as well, which is, you'd say, on the declining side. So around 1,800 stocks advancing to around over 2,000 stocks declining on the Bombay Stock Exchange. Just want to point out, however, that there are a couple of stocks which are managing to buck the trend at this point in time. So I just want to talk about a couple of these Nifty stocks. IndusInd Bank, there seems to be, some kind of relief rally which is playing out for this particular stock for the entire week. That stock has gained around 3-odd%. So do watch out for that. And Reliance has done exceptionally well this this week. So that stock is up around 9-odd%. At current reckoning, it's the best performing stock this week. And separately in JSW Steel, that's the stock that we've been tracking from the past hour odd. That stock is now at the low point of the day, down around 6.5-odd%, so trending lower as we speak for JSW Steel. Autos also not doing too great, so Eicher Motors is down 3-odd%, Bajaj Auto also down around 2.5-odd% at this point. But in fact, staying with the entire auto space, they all are in focus today on the back of their April sales figures. Sudarshan is here with more details on that. Sudarshan.
So auto sales for the month of April have come in as per our expectation. The segment which has done the best is the passenger vehicle segment. Both M&M and Maruti have reported sales better than estimates. For two-wheeler, sales were mixed. As far as the tractor segment is concerned, it has done better than estimates, but commercial vehicle has disappointed. So we start with the company which has reported the best set of numbers is Mahindra and Mahindra. Both auto and tractor segment sales were much better than estimates. And in the passenger vehicle segment, company has become the number 2 player, surpassing both Hyundai and Tata Motors. Now coming to Maruti, sales were slightly better than estimates. Good part for Maruti is this time its compact segment comprising of Baleno, Wagoner sales have done better and it has improved year on year. But one segment that has been under pressure is the sales for Alto and Espresso. Even for the month of April, sales have fallen 45%. But SUV sales have improved by 4 to 6%, and also the sales sales for other OEMs. So basically, company has an agreement with Toyota, and for that segment, sales also have improved year on year. And in two-wheeler space, the company which has done the best is TVS. It has been outperforming peers for the last few months, and it continues to do in the month of April also. All the segments have seen a double-digit growth, especially export segment, which has seen a growth of 45%. Another segment which has done growth of more than 50% is the electric vehicle, where growth was almost 60% year on year. Now, coming to Tata Motors, all the segments have seen a decline except two segments, that is the heavy commercial vehicle and truck. Apart from these, all the segments have seen a decline, especially electric vehicle, where sales were down almost 16%. In the two-wheeler space, the one company which has been reporting the weakest number is Hero MotoCorp. For the month of April, total sales have come in at 3.05 lakh units against our expectation of almost 4.4 lakh units, and this was because of the production that company had shut from April 17 to April 19 at 4 facilities. Today also, two two companies have reported numbers. First one, Bajaj Auto, where sales were below expectation. Total sales have come in at 3.65 lakh units against our expectation of 3.80, and it's mainly because of domestic sales which remain under pressure. And another is Ashok Leyland, where also sales were below expectation, mainly because of MHCV segment, where both segment bus and truck sales have declined year on year. So overall sales for the month of April were mixed. Passenger vehicle has done the best. Tractor is followed up. Tractor also has done better, but two segments that continue to underperform are two-wheelers and commercial vehicle.
Okay, all right, sir. Thanks a lot for that. Well, we'll slip into another snappy break. You come back. We'll focus on markets. We'll also connect with the management of Go Fashion, discuss their past quarter's numbers and the way ahead.
Welcome back. Well, definitely trending lower for the mid-caps. As of now, the mid-cap index is now down right 0.8%. So do watch out for that. The Bank Nifty is just about flat with a little bit of a positive bias. So it's going to move any which way just in the next couple of minutes. But nonetheless, let's concentrate on a little more in terms of numbers. We have Go Fashion, which is buzzing in trade after posting what was a strong set of Q4 numbers. It delivered its highest same-store sales growth in 7 quarters. Improvement in margins also were led by lower discounted sales. To talk more about this, we have Gautam Sarogi, who's the ED and the CEO of Go Fashion, joining in. Mr. Sarogi, thanks very much for taking the time out. Well, if you could just start by telling us about the same-store sales growth. You know, it's at a 7-quarter high. What was the absolute percentage that you clocked in terms of the same-store sales growth? And do you expect this kind of a trend to continue? What might you be targeting for FY26?
Yeah, see, I think last 6-7 quarters have been very tough in the retail industry, and we saw some sort of improvement in January and February. And January and February were positive same-store sales growth on a YOY basis. So Q4 was a good quarter for us. So we ended up with a same-store sales growth of about 2.11% on a YOY basis for Q4 versus Q4. So I think there is some recovery in demand, and we are optimistic and hopeful that the next 3-4 quarters also we should be able to report positive SSSG.
Okay. All right. So you're saying demand is coming back, right? That's the takeaway.
Yeah, there is definitely a slight improvement in demand, and that's what we witnessed through Q4.
So mid-single digit SSG should be gettable for FY26?
Well, internally, that's what we are going to be targeting.
Okay,
so
all right.
We will be as positive as possible.
Got it. What about margins? They've been in early 30s, range bound more or less?
I think we should be able to maintain margins over FY26.
Okay. Just give us a sense about, the cost factor then. You're saying that you'll probably be able to maintain margins. What exactly are the input costs doing to the business now? Do you need to take price hikes? Can you, based on the demand scenario that you're seeing?
See, I think from our raw material pricing concern, our raw material pricing is very stable. And I think in recent times, our gross margins also had improved about 100 to 150 bips. So I think we see consistent gross margins over FY26. Of course, rent and salaries are two very large cost items in our P&L. So if we are able to clock positive SSSG, I think those two line items also will be in check. So considering that, I think we should be able to maintain healthy margins in FY26.
Okay, all right. What about the store addition plans? I think last year that was around 62, and this year you had bigger plans. So could you tell us what's the number of stores you're looking to add?
Yeah, so Nigel, I think we'll end up with at least 120 stores, if not more. And I think our pipeline of stores is very clear. So we would be delivering 120 or more stores in FY26.
Okay. Is that the plan that you always had in mind, or is that, say, a scale up or a scale down based on what you're seeing?
No, I think, look, in the past, we've always delivered 120 plus stores. Last couple of years, we've consolidated our store network. So, in fact, in FY25 also, we had opened about 104 stores on a gross level, but shut 42 stores at the same time. So, our net additions was 62. So, we are just basically increasing our store additions from 104 to 120 plus this year. And we don't see any major consolidations as far as store closures are concerned in FY26. So on a net number, we should be able to deliver 120 plus stores.
Okay. Correct me if I'm wrong, but you did have some plans of going global. Did you launch that store in Dubai?
The store is going to go under fit out soon. So we are hopeful that the store should open before June 30th.
And what are you expecting from that particular store in terms of, say, sales, and what is the expansion that you're expecting, say, when you talk about a global expansion, since you are starting?
This international expansion, what we are doing, so for the Middle East, we are doing it through Apparel Group. So I think first step is to just first open the store. So we are not having any expectations as such. If the store does well, then probably Apparel Group will experiment with another couple of stores. So I think it's a pilot. So I think it's going to take its own time to mature. But from an expectations perspective, because this is the first time we are going there, so we are keeping expectations low. Hopefully, it should cross our expectations.
What does it mean in terms of the average selling price? That's been range bound as well, 750 to 800 bucks. How do you see this number moving?
So I think from a domestic India perspective, I think our average selling price would grow at about 2 to 3% on a YOY basis. And that this would be largely led by product mix. We are not looking to do any price hikes anytime soon.
Okay, no price hikes anytime soon. But you are also looking to expand into everyday wear?
Yeah. So I think, look, this is a new pilot we have thought of doing internally. See, from a Go Colors perspective, the consumer perceives Go Colors as a very functional, core, everyday product. And it's because we are limited to bottom wear. I thought this is a good time for us to expand our product portfolio into other categories of everyday wear. And ladies topwear is something which we've been evaluating for quite some time now. So we are looking to do a pilot and open about 15 stores in the coming couple of quarters. And this 15 stores is going to be largely from our existing network. So what had actually happened was, though our average store size is about 400, 500 square feet, many of our stores were above 1500 square feet. So we are selecting 15 stores of our existing network, which are greater than 1500 square feet in size. And we are going to be introducing these newer everyday wear categories in those such stores as a pilot.
Okay, all right. We're going to leave it on that note. Gautam, thanks very much for joining in and speaking with us. So that's Go Colors talking to us about the expansion plans in the quarter gone by. We do have a couple of numbers on your screen. Godrej Properties, where there's been a sharp dip in terms of the margins, around 300 basis points odd. So margins at 5% versus 8.6%, and the net profit too has fallen around 20-odd%. Newgen also came out with numbers. The stock shot up around 7 to 8-odd%. There was a profit growth of around 22%, which the company reported. So that stock has seen some amount of upside. Godrej Properties, not that much luck. That stock up around 1.6% at this point. EBITDA and profit looking weaker. Well, we need to take a short break, but before we do that, here is some good news. The Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. Network 18 is the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than of Times of India. As per ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms. Welcome back. Well, for a couple of stocks which are moving around, it's quite a lively market. So MOIL is up around 7.8%. That stock is buzzing around on good volumes also at this point in time. Separately, Godfrey Phillips is also seeing some amount of traction. So not that much in terms of volumes, but that stock is up around 2.3% at this point. IRFC is the other one. Mazgon Dock Shipyard, that stock has obviously, along with the entire defense space, seen a spectacular week. So that stock is up around 16.5% at current reckoning and has gained around 17% this month. Bharat Dynamics as well is not doing too great today. So that stock is down around 2%, but it's gained around 5% this week. So that's pretty much what's taking place in the markets at this point. It's a quiet day, you'd have to say. say, for the frontline indices, but the pain seems to be in the broader markets at this point, where the mid-cap index is currently down close to 1%. But overall, a consolidatory trend is what you'd have to say, which continues at least for the frontline indices, now with a negative bias. RealTel, however, is in focus. It's fired up in trade after reporting its Q4 numbers. Revenue and profit came in at a multi-quarter high. Vamakshi here with more.
Well, that's right. Revenue and net profit has come in at a multi-quarter high for RealTel. When we look at the revenue growth, it has been very strong. Revenue has seen an uptick of almost 57%, but the EBITDA margin has come under slight bit of pressure. EBITDA margin has contracted by nearly 27 basis points, and largely this is on account of higher, it's a very sharp jump that has come in. The expenses on projects, it's a nearly 86% jump, putting pressure on the margin. EBITDA too has seen an uptick of almost 54% despite that. The net profit, on the other hand, has come in at 113 crores. This is a 46% uptick. So overall, when you look at the numbers, they look quite strong. Now, let's also look at the segment-wise performance that the company has posted. For their project work services, which has now contributed a significant portion to the company's revenue, the revenue saw an uptick of almost 91%. The margins too have seen a substantial improvement from 2.4% to 4.9%. So an increase in the contribution from this particular segment could also be putting some pressure on the margins. On the other hand, telecom services, which comes with a much higher margin, has seen a revenue growth of only 7%. PBT margin has improved by 103 basis points out here to 23.5%. So overall, when we look at the numbers that have come in from the company, very strong growth in revenue driven by the project work services, but the contraction in margin, a bit of concern. But nevertheless, the street is not paying any attention to that. The stock is firing up in trade on the back of a strong set.
Okay, all right, Vamakshi, thanks very much for that. So that's on RealTel, but Marico is in focus as well. It expected to post its quarterly results today. And Mangalam is here to tell us what the street expectations are from the FMCG company.
Well, Marico has been doing well over the last 1 month or so. In fact, in the consumer space, it's been reporting better performance than all the other companies this time around. And the street expects that to continue itself, because the company in its fourth quarter update itself has said there will be stable demand trends amidst improving trajectory in rural. And they expect consolidated business at low double-digit growth, along with India business posting a sequential uptick in underlying volume growth. They expect marginal growth in operating profit, and that's something that the street has adjusted itself for, given the high prices that we've seen in copra. So overall revenue growth seen at 17%, close to around 2665 crores. The EBITDA grows just 4%. That means a margin dip of nearly 200 basis points, and the net profit grows around 5%. The number you're looking at is 335 crores. What the street is working with is a mid-single-digit volume growth, anywhere between 5 to 6%. This is largely in line with what the company reported in the third quarter itself. Parachute coconut oil saw some transient sluggishness in volume, so the management is positive about the next year. Saffola did well, and value-added hair oils also exhibited gradual improvement. That was a piece in their business which wasn't doing particularly well. That is showing some sort of improvement.
Thanks a lot for that, Mangalam. Well, SBI, that's the other company that will be reporting its quarter 4 numbers tomorrow. Abhishek gets us the key expectations. Abhishek?
Well, Nigel, to begin with, the NII growth rate on a YY basis could be one of the lowest that you are seeing in the last 20 quarters as per analyst estimate. So the key things to watch out is that the deposit growth to be lower than the system growth. MOSL estimates a deposit growth of 9.15% YY and about 2.7% sequentially. Advances growth rate to remain healthy. Again, Motilal Oswal estimates advances growth of nearly 13.2% YOY and about 4.75% sequentially. The net interest margin can come under pressure both YOY and quarter-on-quarter. So, Kotak Securities estimates a decline of 34 basis point on net interest margin YOY and 12 basis point decline on a sequential basis. Now, operating profits could come under pressure. The absence of treasury gains this time around could hurt the operating profit. So, Kotak Securities estimates a decline of nearly 30% YOY on operating profits and about 14.2% on a sequential basis. Now, asset quality largely has remained stable for large banks, so expect slippages can remain stable or improve sequentially, and recovery and upgrades to be on the lower side. So, asset quality, however, is expected to improve on a sequential basis. Motilal Oswal estimates the gross NP ratio at 1.96 versus 2.07%. Now, management commentary with respect to business growth, net interest margin and return ratios numbers we'll be seeing closely. Our polls suggest an ag growth of just 1.9% YOY, while profit can decline by 17.5% on a YOY basis. Back to you.
Okay, all right. But Abhishek, stay on. We have Kotak, which will be reporting its numbers as well tomorrow. Tell us what are the expectations?
Well, Ekta, Kotak Mahindra Bank, the ANAC growth rate could be one of the weakest in last 14 quarters, and PAT can decline the highest in last 20 quarters on a YOY basis. So take a look at the key things to watch out will be the business momentum. Now, deposit growth and loan growth will be key monitorable factor given the fact that Motilal Oswal estimates deposit growth of just 5.5% YOY and loan growth of just 6% on a YOY basis. Net interest margin can decline YOY, however, can remain healthy on a sequential basis. DAM Capital estimates net interest margin to decline to 4.93% versus 5.28% in the same quarter last year. Now watch out for low cost deposit momentum. It has been on a declining trend over the last few quarters for the industry, but this time around that low cost deposit momentum has been strong for large banks. So Kotak Mahindra Bank has one of the highest CASA ratio in the banking sector. Last quarter it was around 42.3%. Now slippages can remain elevated. Watch out for the unsecured loans which can cause pain. Personal loans can see some slippages tapering off over there as well. Now asset quality expected to remain stable. Motilal Oswal estimates gross NPA ratio to be flat on a sequential basis around the 1.45 to 1.5% mark. Management commentary and outlook will be important with respect to business momentum as well as credit cost. Our polls suggest an ag growth of 7.5% YOY and profit to decline by more than 9.5% on a YOY basis. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, for the time being, we'll slip into a short break. On the other side, Manisha Gupta will be joining, and she'll be joined by Vaishali Banerjee, the Managing Director, India at Platinum Guild International. Stay with us.
Welcome back, and joining us on the show now is Vaishali Banerjee. She's MD India, Platinum Guild International. Vaishali, hi, thank you so much for joining in here. When you look at the gold price is trading at $3,000 an ounce and platinum in a discount at almost $1,000 an ounce. Does that give buyers and industry as well a bit of an upper hand in sense of buying? How has been 2025 for you until now? And would you say Akshaya Tritiya sales, especially when it comes to platinum jewelry, also have done well?
Hi, Manisha. Good afternoon. Lovely to be here. And as you rightly say, I think this is a historic opportunity, if I would say so. And this is something that we are seeing globally, because at this kind of price differential, platinum is actually presented with a huge opportunity. If we look at from the consumer point of view, it's possible to now have platinum across a range of jewelry categories, a range of price points. And for the consumer, they can actually have their budgetary needs met with a high value, high precious, rare metal. So there's literally no need to have any kind of compromise on quality, on purity, on weight, and things like that, which are really important. So it does present a very, very strong opportunity. And this is something that we are seeing picked up here in India, and we are also seeing this picked up globally. And of course, globally, there is this move from white gold towards platinum. And here we can see that the platinum uptake has really picked up. This, if you look at so far, if we look at the Jan-Feb, demand was up at retail close to 15%. And Akshaya Tritiya, though the numbers are still coming in, looks extremely positive. So south of India seems to be up almost 18% in volume. And the rest of India, while we are getting numbers, I think what we've got so far is looking like a 12 to 15% growth. So strong numbers reflective of the real opportunity, both from a retail point of view, as well as from a consumer point of view.
Well, those are very, very strong numbers coming in, Vaishali. Just going back into history, I understand 5, 6, 7, 8 years ago, platinum was at a premium to gold, and that's how perhaps it just about continued for the longest time. How many years has it been that platinum now is at a discount? And when you look at the historical pattern as well, has that been often seen on charts?
So yes, it has been at a discount to gold for a few years now, but I think the delta has really increased as of now. And that has been, so over the last few years, we've actually been seeing this trend. And in India, we have a lot of this bimetal jewelry, which is really platinum with some gold and 18 karat pink gold, mostly because from the design perspective. But what we've really seen is that the metal is very precious and very, very aspirational. And the quality of the metal is actually not depreciating, even though the price is at a discount. And that is seeming to be the consumer opportunity, and the people are tapping into, both from the retail and industry point of view, as well as from the consumer point of view. So we've seen this trend over the last few years, and last year and this year, it seems to be at this kind of difference, which is a huge opportunity, really. Because if you look at it, it's cheaper than 18 KT. So, 22 KT for sure, but currently platinum is discounted to 18 KT. So you could get 95% pure metal in jewelry, and at a price that is less than 18 carat.
Vaishali, also, when it comes to the Indian markets, what is the kind of growth that you have seen on an year-on-year basis when it comes to buying into platinum?
So it's been a very robust market. So if I just discount the COVID years, we've always looked at initial years, of course, were very high because it was a nascent market. But once the market has been established, we've always seen around 15%. If I would average it out, some years it goes up to 18, some years it is about 12, but around 15% retail, and fabrication is always ahead of that, because we've also seen a big growth in exports, because the US demand has grown, Europe demand has grown, so we've seen fabrication growth as well as domestic retail growth.
Just when I look at the markets on an international basis, we do understand, as per reports, that 2025 is going to be a third straight year that we are looking at a deficit in the global markets when it comes to platinum. Do you also see that supporting the prices going forward? Because platinum is one part jewelry, but it also is about industrial demand. It also is about green energy demand.
Absolutely. And that is why it is very, the price and demand is closely linked normally, and the deficit that you rightly said, and we therefore hope that the price would remain strong and and we see a price appreciation over the next few years.
Vaishali, also a final question then. How do you see India retail, India jewelers now give shelf space to platinum? Well, yes, it is increasing in size because of the price opportunity as well. But what has been your conversation here? Where do you see more platinum being bought into India?
Platinum is no longer only a large metro phenomenon. It has gone into tier 2 cities and so on. So, and all conversations are indicating that retail is actually expanding the range. As I mentioned before, very briefly, that the bimetal jewelry, which is an entirely new category for us. So it's not only just plain platinum with diamonds and other precious stones, but now also platinum with 18 karat gold. So I think the expansion of multiple range of jewelry and categories like this is automatically going to result in larger shelf space, because jewelry needs to be presented to the consumer at the store.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. Well, we need to wrap up on the show, but while we do that, just a quick update with regards to the markets at this point. It's a very quiet day, so the Nifty is just about lower by around 43 odd points. We have the Bank Nifty, which is just about treading water as we speak, and the advanced decline ratio, which is just about holding on the declining side. In terms of specific stocks, it is a lot about JSW Steel this afternoon, so we will be discussing that as the day continues. But that stock is at the low point of the day, down around 6.5%. And a couple of the auto stocks are under pressure as well. So Eicher Motors, Bajaj Auto, Hero MotoCorp, all of these stocks are down anywhere between 2 to 3.5%. Pharma not doing too well today. So Cipla is down around 1.8%. Mankind Pharma, as you saw earlier on your screen, that stock is down around 3% at this point. On the upside, just watch out for a couple of the stocks such as Adani Ports, which is your top gainer on the Nifty. We'll take a short break, but stay tuned. Business Lunch up next.